Good morning. It has been a while. Got back a couple days ago. I think last night was the first time I was able to sleep like a normal person instead of having crazy sleeping pattern. I think yesterday, last night, and this morning was the first time that regular sleeping pattern returned. Thankfully, I feel like a zombie the past 72 hours. But let's jump right into it. Okay, right off the bat, TLT seemed like economic data was a lot stronger than the market expected while I was away, no doubt. Otherwise, we wouldn't have this crash. I did add to TLT while I was away. I think 5% is a decent spot that I think will have a major impact in consumer because for those that pay attention to mortgage rate, auto loan rates, surely you see that 8% mortgage rate for 30 years flashing the past week, right? And we haven't had that since I don't know when. Ask anyone that bought a house in the past 20 years and see if they remember 8% plus interest rate. Okay, so psychologically, I think that would play a big role in how consumer, as well as auto loan, you're gonna see used auto loans at this point. I believe used auto loan across the board, even with the highest credit rating that you have, is gonna be double digit. Like you're not gonna get a loan that is below 10% for used car. New one, you might have teaser rate out there, 5 or 6%, but at the end of the day, if your credit rating, your credit score is below 700, you are staring at insane rate. Forget about buying a house. Okay, if you don't have 750 and above, you are staring at 8.6% 30-year mortgage rate. You're staring at 9% for new car, 10% for new car, 12% for used car. It's unthinkable for people to even like go out there and buy a car. And I think, you know, unfortunately, I have been saying for over a year now that yeah, a year ago I was optimistic that 4% Treasury yield is gonna curb consumer spending pattern, and it didn't. At the end of the day, as much as I hate to see 10% decline in TLT in the past few weeks or months, well, the economic data is just not where it should be for the Fed to stop. It is that simple. Okay, the Fed is trying to curb inflation, and people spending pattern are not changing or not changing fast enough. One of the things that I have said for the past year plus now is that from past experience in following economic cycle, consumer spending tend to only break when layoff happen because human beings have poor habits. Okay, we don't change the way we spend our money even if our friend in the office got laid off. Yes, even that in your face kind of obvious doesn't change people behavior. Usually the only thing that change is when you walk in the office and you hear, Johnny, clean up your desk, we had to lay you off today. Please clean up your desk. Security will escort you out of the building. That is the wake up call that force people to change their spending habit. Okay, that's the only thing. So we'll see. Of course, employment data over the past week was too strong. No doubt that's the reason for this dip in TLT. Let's peer back into a long horizon and see what's going on. Let's go back 10 years. Yeah, this is unprecedented to see. If you invest in the bond market, right? Sure, you're collecting yield. If you have a exposure to fixed income in the last 10 years, you have get a well balanced portfolio, and this is just a crushing blow for the past 3 years to see your bond portfolio completely eviscerated, and all the income that you collected in the past 10 years cannot make up for the negative in the past year. Wow, insane, right? Insane. Who would have thought this can happen with fixed income, right? Let's go back 15 years. Once again, yeah, that is crazy. Okay, so that's why mortgage rate is where it is. Look, it is below, as of last week, it was below 15 years. Wow. Okay, my son was born in 2007, and we didn't see this kind of rate. You have to go back, I believe, from what I read, let's go back 20 years. Insane. Yeah, look, even going back 20 years. See, it's, it's, it's worse than 20 years ago. So yeah, go back to what I just said before. Can you imagine investing, having a balanced portfolio for the past 20 years and enjoying the diversification of bond in your portfolio, only to see it eviscerated? Eviscerated. Okay, sure, you collect enough income, hopefully, in the past 20 years that you are in the green. But how much are you in the green? How much? Wow, right? So um, if you bear, if you are shorting bonds the past 6 months, congratulations, a huge congratulations on a 15% gain, huge congratulations. But I think it's time. Okay, it's time. This country, the Fed, the economy cannot handle this kind of move for much longer. Okay, so we'll see. I've been wrong. No doubt I have been wrong for the past 6 months. If you asked me a year ago, I would have thought that we would be in a deep recession sometime in the last 6 months, and rate would have been at least starting to get cut. I was wrong. Okay, so I misjudged the resilience of consumer bad habits. All right, let's move on. Enough on TLT. Okay, um, let's go on to the major indices. DIA is worst of the bunch of the major indices because DIA basically is flatline for the year. Okay, all that gain for the year is gone because you look at December 31st. Let's take a look. December 31st. Yeah, we are at where we are now, basically. Okay, so all that gain, all that resilience that we see back in August, channel high, breaking channel, not a good thing, right? We talk about channel. We love channel, but we also not loving channel breaking. It didn't just break, clean break. Okay, so is there another channel? Can we start to draw a channel? Let's go through this. Okay, of course today is the CPI data, so the market was pretty tame yesterday, right? Yeah, let's see. Could this be the channel? Could this be another channel? Is this something that we can call a channel? I think it's possible, right? It's possible. If you want to, for now, let's not draw the channel yet. Okay, for now, let's not do that. But this downtrend is pretty ugly. Is it a surprise that it met resistance at the 20 MA? 200, yeah, I mean, yeah, the market bounce and stop at predictable spot. Okay, we have the CPI coming out later today, so yeah, You gotta be crazy to trying to stick your head under the chopping block. Same thing here. Is it a surprise that the market couldn't go higher yesterday, right? I mean, sure, jumping over the 20 and holding is significant. It is, but okay, you're looking at potentially gap fill and 100-day sellers up here. So if you long SPY, depending on the CPI, you could be looking at potential trim spot right there at the 100 MA, okay? Because that basically fill the gap. So you will have sellers coming in or short coming in to do that. So don't be greedy. If you bought SPY down here, congratulations. You should look to trim. You should already trim some yesterday. But if you didn't, trim up here, okay? QQQ, same thing. Major resistance level and support level here. So it's holding, okay? It's holding. Where can it go? Well, the Q probably has the most room to run should CPI come out weak and rate no longer go higher, okay? Because um, no doubt, I think if you ask anyone that follow the market for a long time, they will tell you that how the Q has behaved is significantly better than they would expect compared to how TLT has performed. Because TLT normally, when rates go higher, and bond crash, TLT has usually QQQ has usually crashed much harder. But right now, safety is running into the Magnificent Seven. It is that simple. Okay, it's not everything in the Nasdaq is doing well. There's a lot of mini crashes in many places in the Nasdaq, but the Magnificent Seven is holding up the Q very well compared to SPY and the DIA. Okay, because if you look at December. If you look back at December year to date, the Q is up. Okay, no doubt about it. So the Q is up. DIA, Dow Jones, flat line. Not the Q, very strong. Year to date, very strong still. Sure, it has stalled out over the last 3 months. Okay, basically, it's back to where it was in June. Okay, so the last 3+ months, 3.5 months, 4 months has been brutally difficult, but it had a great run since, from December through June. All right, let's jump into some obvious sector to discuss. Lockheed Martin. So much hate. So much hate. Oh my God. Okay, this was one of the most brutal slide in Lockheed Martin that I can witness in a long time. This was worse than a decline from here. Well, I wouldn't say worse. I say it's about um, equal in magnitude. Okay, if you look at the drop from here to here, here to here, here to here, I bet you it's about the same magnitude. Okay, um, and well, you had the ugly situation in the Middle East. Well, yeah, it is what it is. Okay, if you held through this pain, look to sell up here. Okay, the 100 MA, the gap fill, the confluences is right there, right? So yes, please, I have an order in. I already have an order in to sell at 445. Sure, would I like to sell more up there? Yeah, but for now, 445 is good enough for a 10% trim. Okay, the one I really like is Raytheon. Okay, Raytheon. I think yesterday, sure, I was very cautious on Raytheon after this drop, right? I talked multiple times about I'm not buying yet. I'm not buying yet. I'm waiting for the news. on the cost of fixing those jet engine, and the news come out and it was ugly. And I waited, okay, and I bought. Yes, I bought down here. I waited, I bought, and then I suffered the pain. Okay, and now I'm near even. I'm not even. Okay, so to make it clear, I'm not even on my share. But at the same time, I was not, sure. Was I happy on this ugly move from 74-ish to 68? No, who would be? But I was on vacation. Okay, I did not witness. I did not check my balance portfolio. I did not check the balance on my portfolio during you know those 2 weeks for the most part. Um, but I watch it closely on this pop. Not surprised that seller coming in at the 20 MA, right? That's the way it is. Just like seller was coming in, holding, up here. But the fact that it did not give up and actually went higher was a good thing. I think, sure. Um, I think ultimately, can it run into this zone where the gap down happened? Yeah. Okay. I think 80. Sure. Over the next week or two, you will see um, the 50 MA come down, right, sharply, most likely into the 77-ish area. But sure, it will be a resistance spot up there when it happened. But then I think 80 is very likable, and depend on what kind of money the U.S. are going to throw at Raytheon for more Patriot missiles and rockets and all that stuff. Then yeah, you can see this thing fill the gap. Okay, I won't be surprised to see this thing fill the gap between now and Christmas. Okay, my first spot to trim is 80. My next spot to trim, of course, is the gap fill around 83-ish. Okay, so that's my take on Raytheon. The fangs are holding up, as I mentioned about how the Nasdaq has been holding up well, but I'm not buying, I'm not adding. Okay, it's Amazon. Yeah, it's okay. I bought some before I went on vacation, and that's fine. Same thing with Google. I bought some before vacation. um, if you want to trim, yeah, you should. I don't have a lot, so I'm like, yeah, I can hold on to it. But if you have a lot, you should trim into resistant. Nothing wrong with that. Meta, I bought. I did not trim, but if it get anywhere north of 326, then I will trim. Okay, it's can be too greedy. Okay, I'm glad I bought some before I went on vacation. Tesla, um, I'm not crazy on Tesla. Okay, no, I'm not a fan of Tesla here. I'm all out on Tesla for now, and stay out. Apple, I bought back. But I think it's a good spot to trim some here for sure. If we see 182, I would be probably all out if I see 182. But I think this is a good of any spot to trim if you bought the dip before um, down here, which I did. For those that follow me, I sold right after the new iPhone. I was disappointed on the product launch and the fizzle. I'm glad I did that because it dripped down, right? And I bought back some share, not a lot. I bought some. I sold out right after the iPhone thing, and yeah, Apple, yeah, meh, it's nothing too crazy there. Nvidia, I bought. Uh, I think the two lowest price I bought was 413 and 410. I have two outstanding order that trigger, which was crazy. But hey, sure. If you follow me, I talk about being have a tight stop up here, right? In the 440 something, 450 range. I can't remember about a month ago. I talked about having a tight stop up there, and then I bought back some here. And right now, I'm looking to exit or trim in the 465. I have an order in to trim from 465. Uh, why do I have that? Okay, look, potentially we can look at a head and shoulder pattern. Look, this here, this is a shoulder, a head, and then potentially a shoulder here in the 465 to 475 range. Okay, so we'll see if they run NVIDIA into that range of 470, 475, and then it come down, then you're looking at shoulder, head, shoulder. Okay, and then it's gonna be, and then it will be an interesting trading pattern to go with. Okay, so that's my take on why I cautious everyone to start to trim and take profit in the 470. If you don't want to sell at 465, I understand. Be a little bit greedy, but 470 for sure. Between 470 and 475 is my some of my orders, okay? Because I think we can look at a head and shoulder pattern. All right. I don't want to keep this very long because, of course, the CPI data is today, so that's going to be the big mover. But let's talk about the sector that got beat up pretty badly. Pepsi. Holy cow. Okay. If you ask me before vacation that would I be worried about Pepsi, I would say no. It's Pepsi. But no. Missed the market. Decided that it's crazy. Okay. Weight loss drug, fear of people eating less snacks and blah blah blah. Yeah. Let me pose this rhetoric question for everyone. Do you know how expensive those drugs are? Do you know how many people in the low range income are overweight compared to high end? Yeah, Elon Musk have no problem shelling out 10 grand to get the shots. Do you think the average low income people that are overweight, and there are significant amount of low income people that are overweight, significant, hate me if you want, label me whatever you want to label with that kind of statements, but that's factual. It's factual. It's not racist, it's not elitist, it's factual. A lot of people cannot afford those drugs, period. Less snack, less eating, less this, less that, yeah, whatever. Nonsense, okay? Nonsense. Absolutely nonsense. Sometimes when analysts put out report to claim this or that, it's just utter stupidity. Utter stupidity. It's just, yeah, there'll be less snacking on caviar. Less snacking on filet mignon and caviar, not Frito Lays. Yeah, people. You think people worry about? Oh, I want to go spend five figure of my income on weight loss drug to get skinny. No, I want to keep spending $5 on a bag of chips daily. Oh my God, it's so silly. So, um, the thing is, I had 3 put spread that I sold many months ago for October 20th. 165, 120s. And they look pretty ugly. When I get back from a trip a couple of days ago, those 3 put can easily put a 4-figure dent into my return. 4 figures the loss, okay? Because at 160, I will be losing, $4 a spread. Multiply by 3. You do the math, okay? But for now, it's looking okay. I might not make much money or might even lose a little, but it's all right. It's all right. If you buy Pepsi, if you add to Pepsi on this ugliness, I think you did good. You did smart. Same thing with Coke. I don't need to say anything more, okay? McDonald's, same thing. Oh my God. I would add to McDonald's, okay? It's just McDonald's is going to get a boom. I can tell you. It's the weak, the worse the economy get, the more people would trade down. Instead of going to Olive Garden and spend $12 a plate, they rather go to McDonald's and spend $6 on a meal package. Guarantee you. Guarantee you. Okay, so I think if anything I like to add is Mickey D's into my portfolio. All right. Let's talk drugs, okay, before I go. Eli Lilly, I trim twice. I did not trim everything I bought on this ugly move, okay? So, yes, I trim, I bought here. I trim, I bought bags, a whole bunch. I trim, and I will keep on trimming. And today, $5.95. Oh my good Lord. Am I trimming? Yes. Let me end this stream, or well, let me put it in order while I'm talking. Oh yes, I will be trimming. I might even trim everything that I bought down here. Why would I want to give up 60, 70, $75 in gain? Oh, the madness. Oh, the madness. Love it. Love it. Okay. If anything that had been a joy to trade has been Eli Lilly. You betcha. So far I sold a third of what I bought on this ugly move down here. Okay. So I think the lowest that I bought, let's see, let me see what the cheapest that I paid on my Eli Lilly share. Let me see. Let me look at my portfolio. While I'm looking at my portfolio, the report about people spending less on snack, blah, 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 is from Walmart. I think was it Walmart that talk about how, they see a pattern in whatever, and who knows? Okay, who knows? I do think there could be an anomaly from Walmart. Certainly, Coke, Pepsi. Well, Pepsi said no. We have organic growth across the board. Let's see, Eli Lilly. Let's see, what did the cheapest I pay for the share that I bought, blah, blah, blah. Okay, 540 was the cheapest that I paid. Because, I do I'm not sure what I paid for the one I sold yesterday. Because I did not the first in, first out trade. Because my earliest share of Eli Lilly is way down here, right? So they have huge gain. Huge gain. So I'm not selling them and tacking on, $200 of gain per share. So I did is I bought the share and I trimmed the share that I bought over the last 3 months. So the cost basis, lowest share I have right now is, well, the highest cost basis I have right now is 540 and 543. So those shares are going to the order. Maybe the one that I trimmed yesterday was lower. Doesn't matter. Here I go. Where's my order? 595 is gonna go. I'm gonna put one at 595 and then 600. Yeah, 595. Not gonna worry. Okay, 595. Order is in. And then I'm gonna put another order in for 600. And then one at 602. Break the record. Yeah. Okay. Oh, the order just triggered. So it took off. Okay, so I'm gonna put in another order of Eli Lilly. This time, forget 600. Skip that. Let's move right into 602. Yeah, let's do that. Why bother? Okay, I'm gonna break the record. Let it break. 602. So there you go. Instead of like putting in 3 order, I'm putting in one at 595 that already triggered, and then one at 602. Be my guest. Take away those shares. Complain on a $55 gain. I'm not. I I was holding the last 100 shares of the 600 shares I have up here. If I was around and my stop trigger can do. So if you did what I did and you bought down here, congratulations, look to trim up there. Okay, so for now I'm all out, but can't complain. Okay, cannot complain on the sell there. Okay, nothing to complain on. Pfizer, oops, Pfizer, um, still ugly for a long time. Okay, as much I love to add more to Pfizer, it just cannot be. Okay, tax loss selling is gonna keep this thing there. Hang in there. 2 more weeks. Okay, tax loss season is near the end. Hang in there. Before I go, banks, real quick. Goldman Sachs, for sure, sell more put spread. Where 300, okay? Yeah, I like it. 300, 290 put spread. Yeah, I like it. I'm waiting for a down day on Goldman Sachs to do some kind of move as far as adding 38, 40, 37. I'm fine. I'm leaving them there. I do not mind. I'm fine with that, okay? Because I've been saying, of course, for those that follow me, I sold 75%, buying them cheaper. Tax loss selling is still coming. And then rate, hey, to be honest, I'm shocked. To my surprise, when I returned, let's look at the KRE chart. I'm just like, geez, the way TLT was, I would expect KRE to be hovering 34, 35, but it's holding up here, which is fine. That's why I'm going to leave my put spread for next Friday. I would not more to buy back those 300 shares that I sold much higher, okay, and lower. I take it, okay. So for now, that's what it is. Now AXP, same thing here. If I was around, I would have add share for sure. Would I add share today? No, not this week. But I like AXP down here. But on AXP, I'm watching for entry point. If not, selling in 225 and below. Yeah, I take it. MasterCard, same 365. Yeah, heck yeah. For those that don't understand on transaction, okay, when you swipe the card, when you go to the store, that's how they make their money. They don't make it. The risk is on the banks, the JP Morgan, the Bank of America, that hold the debt. Now the other credit card that are also at risk of the is because they hold the debt. Okay, they make money off the swiping fees, but they also hold the debt. So in a weaker economic environment, they can be in big trouble. Loan delinquency can rise. MasterCard is a buy all day long on tough economy because people will use the card, swipe the card as often as they have to keep on living. Okay, AXP tend to hold up better because up until now, and I'm sure going forward, is they have richer clientele that have lower delinquency rate. So as poorly as they are doing, they don't have delinquency rate compared to say Discover. Let's say what Discover is. I think Discover. Yeah, Discover. I have not bought. Let's take a look at the AXP chart going back 3 years. A little bit better. A little bit. Okay, it's like I said, it's a worse off because, like I said, Capital One, Discover, American Express. Yes, would I have added to American Express last week on the low? Yes, but now that it's off the low, I'd rather allocate more capital to MasterCard or Visa on the dip. Thank you for watching. Good luck with the CPI in about 33 minutes. Yeah.